Moving to a new country can be very exciting, but it's also very easy to make financial mistakes when you're trying to learn a new system. Today, I'm going to be talking about financial mistakes that new immigrants make when they move to Canada and how you can avoid them to stay on top of your finances. Hi, and welcome to my YouTube channel. My name is Ify, and this is Ify's Beats. Here, I share with you my experiences living in Canada as a Nigerian Canadian. If that's the sort of thing, please like this video and also subscribe. So number one financial mistake that new immigrants make is not understanding how credit works. In Canada, your credit score affects a lot of things. Dare I say everything? It can affect you getting a car loan, very important, renting an apartment, or even getting a house whenever you're ready. Many newcomers who are from cash societies like myself from Nigeria think that getting a credit card is a scary thing, and many of us stick to having a debit card, or sometimes when we get a credit card, we delay in using it. But these do not help you build your credit score. Without a good credit history, you might be denied loans, or you can get loans but with higher interest rates. My tip for you today is to start building your credit very early. As soon as you land, most financial institutions would give new immigrants a credit card with a limit as low as $1,000 to as high as $5,000. Pay your bills on time and also avoid maxing out your credit limits. Factors that affect your credit score include your payment history. So late or missed payment significantly impacts your credit score. Number two is your credit utilization. Using a large portion of your available credits makes you appear riskier. So keeping your utilization low is usually advised. Number three is length of credit history. So a longer credit history is usually seen as a positive thing. That is why I advise that you get a credit card as soon as you open your bank account. Number four is credit mix. Having a mix of different types of credit like loans, mortgage, cards can be beneficial, showing you can manage various accounts. Number five is new credit applications or inquiries. Applying for too much new credit in a short amount of time can affect your credit score and suggest potential financial distress. Paying your bills on time, keeping your credit balances low, keeping older credit accounts open, even if used occasionally, and checking your own credit report and score. Most banks give you the option of being able to check your credit score, and this is referred to as a soft check. I'm able to check mine with TransUnion on my bank applications. Number two financial mistakes that immigrants make is overspending to maintain a lifestyle. So a lot of times new people try to overspend to maintain a lifestyle, especially the one they had back home. It's very tempting to want to show your success or keep up with friends and family, but living beyond your means can hurt your finances very fast. This is very common when people attend a lot of social gatherings with their fellow immigrants. So for example, I've heard of stories of people saying they go to a church and people are sizing them up by the car they drive, whether they own houses or not, what residency permits they have, are they citizens, are they permanent residents. Not everyone is able to withstand peer pressure. So there are many people who have gotten into peer pressure, bought expensive cars with expensive loans that they spend a lot of their income trying to pay off every month because they're trying to keep up with the Joneses. And that is very expensive, and things like rents, groceries, transportation can add up very quickly. So focus on budgeting and living within your means. Your future self will thank you. No one is feeding you, no one is giving you free money, so there is no gain on it. Well, sometimes there is a gain, honestly, because some people like to network and they say fake it till you make it. But even if you're faking it till you're making it, please do that in a reasonable manner. We're living in a credit society and it's very easy to run into huge debts. So please live within your means. It's great to have a good credit limit that you can always borrow from, but keep your expenses as low as you can. Number three financial mistakes is ignoring taxes and benefits. Some newcomers don't realize that Canada has a unique tax system, including things like GST, HST credits, Canada Child Benefits, and tax deductions for newcomers. I will honestly tell you that I made some of these mistakes when I newly landed. I didn't realize some of what these look like, and I think I even missed out on some of them in the beginning. So please research. Even if you land in the middle of the year after tax season, you're usually qualified for the GST and HST credits. So please apply to the CRA so that you can start getting some of those monies back. But even if you apply late, they would usually pay you the backlog that you missed. But who knows, maybe you need it more urgently now than you'll need it in the future. So failing to understand how taxes work can lead you to overpaying or missing out on money that you are entitled to. The tip is to file your taxes on time, and if you're unsure, get help from a professional or a community tax clinic. They often offer free services to support newcomers. For example, I got a free tax filing service when I newly landed. The government of Canada posts some of these free support services on their website, so I was able to get in I think a name of one of them, and I called and they were able to file my taxes for me for free. But that being said, filing your taxes is pretty easy, and I think I should make a follow-up video on that. But it's something you can do for yourself and you can learn more about it. Number 4 is using payday loans or high interest credits. When money is tight, it's very easy to fall into the trap of quick cash. But payday loans in Canada can have a high interest rate as high as 400%. Please avoid payday loans as much as possible. Explore low interest personal loans like credit unions, community programs to help newcomers, and personal line of credit. Not everyone has the privilege of coming with a lot of financial support. And also, even if you do, life can really get tough. But try to avoid high interest loans. Number 5 is not having an emergency fund. Life in a new country comes with unexpected expenses. Last year, my car was towed for the first time, and I spent over, I think, $500 trying to retrieve it, even though it had only spent maybe 24 hours in the tow lot. So things like unexpected rent increases, car repairs, and even medical expenses can come up at any time. So the tip is to aim to save at least $1,000 initially and then work towards 3 to 6 months of living expenses. Even saving small amounts each month adds up. And if you watch my video on black tax, you can see how I tell you how even just some of the monies you send home can really help you build an emergency fund. Number 6 is overlooking retirement planning. It's very easy to think, I'm just starting out, retirement is still far, I can plan later. But Canada has a pension system in place like the CPPs or RRSPs that you can use to your advantage. The tip is to start small, as little as $50 to $100 a month in your TFSA or your RRSP can grow significantly over time. And thanks to compound interest, you can have a significant amount of money left for you during retirement. I feel like this is a very important topic for immigrants because not everyone comes at a very young age. I was fortunate to come in my 20s, but some people immigrate to Canada in their 30s, in their mid-30s, in their 40s, and their working years are significantly lesser than someone who came here at, say, 20. And even worse for people who had to sell a lot of their properties in their home countries to move. This means that you do not even have anything to fall back on in your country, and all you have is here in Canada, and you have even less time to work. So it's important that you start making plans for retirement as quickly as possible. Number 7 is not learning about Canadian banking and fees. Some newcomers are surprised by things like ATM fees, account maintenance fees, or foreign transaction fees. Honestly, I don't feel like any Nigerian is surprised by that because we have all that in Nigeria. But it's important that you compare banks, choose the right account for you, and use online banking to track your spending. Simple awareness can save you hundreds a year. Bank account fees cost as much as $17 per month. So when you have multiple accounts across different banks, there is a possibility that you're spending a hefty sum paying account maintenance fees. If you have hobbies like traveling, there are credit cards that help you amass points that you can put towards traveling. So this is why it's important to honestly compare accounts and not just open any account. Some credit cards give you points that you can put towards your groceries, towards buying clothes. Honestly, if you use your credit card wisely and you get the right credit card, it can help fund some of your hobbies. So learn about Canadian banking and banking fees as much as possible to make sure that you're making the right decision. Number 8 is getting into debt very quickly. Sometimes newcomers take car loans, credit cards, or personal loans without fully understanding interest rates or repayment plans. Even mortgages. Some newcomers go and buy homes that they are not ready to buy, or they cannot easily afford because they are trying to keep up with the Joneses. Debt isn't bad if managed carefully. After all, we live in a credit society. But mismanaged debt can be very, very stressful and expensive. So always borrow what you can afford to repay and always check the interest rates. Ask yourself, do I need that new car? Can I do with a used car? Can I get a good car from Marketplace? And even if you're getting a used car, is the maintenance cost for this used car going to cost more over time versus just getting a new one? You can also get used cars from dealerships with better warranty, so you don't have to get them from Marketplace. My point is, think carefully when you're getting a car loan. Getting credit cards with high interest rates. Sometimes I believe that they send credit card adverts to your mailbox, and some people right off the bat get some of those credit cards and get credit card with such high interest rates. It's absurd. So understand points like interest, compound interest, principal, prepayment, loan term, interest rate, credit score, debt to income ratio, tax-free savings account, RSP, the registered retirement savings plan, RESP, the registered education savings plan, amortization, and so much more. So there you have it. 8 common financial mistakes people make when they move to Canada and how to avoid them. Building a solid financial foundation takes a lot of time, patience, and learning. But avoiding these mistakes would give you a head start. So it's time to read, learn, invest, save, and plan. There are other things to cover in other videos I'm going to be making in the future, like planning for your children's college education and how to invest here in Canada. So let me know which of these mistakes you think new immigrants make the most, or which mistake you've personally made in the past yourself. I've mentioned some of mine, and I'd love to hear your thoughts. Don't forget to like, subscribe, share, comment, just engage in whatever form. See you in my next video. Bye.